that is probably, I mean, everyone knows it's 6, so people can hop on and it's recorded anyway. But yeah, obviously you lot wanted to know more about, well, as our first sort of topic-centered Zoom, about POI selection, right? So, like, if we just follow this, right, like this flowchart, right? There are, like, you know, this is going to be a work in progress. This was a not quick one, but one that we put together, not necessarily back testing it fully, right? But it's all the valid things we look for anyway, right? Like if we just look at this, right, like this melt today, right? So, right, first things first, POI visible on M15 minute. Well, yeah, we can see some form of supply range on daily, right? So cool. Now, is the POI engulfed, self-buy, buy to sell with imbalance? No. Okay, so let's refine it, right? Let's just cut price here, because this, like, honestly, I missed this completely. Like, I thought it was coming up to this, but yeah. But yeah, so yeah, it's so we need to refine it, right? So we just go down through time frames. Oh, there we go, right? We've got we've got what's this thing like this? Hold on, sorry.
Always recorded.
So, yeah, so we want to refine it to a refined self-buy buy to sell, right? Here we go. On refined buy to sell that gets engulfed, right? Imbalance isn't essential, but yeah, it's got imbalance, like down here, so another plus, right? Does the POI have interaction? So by interaction, I mean, essentially,
I don't mean these people.
Just the one freezer that
you can mute everyone, so I can just hit mute all. Can't mute me. Yeah, cool. Yeah, cool. Yeah, so does the POI have interaction? Well, yes, it reacts to this, right? The extreme demand, right? So cool. So we don't, like, at the moment, we don't have to come in there. Well, we've had to do this, right? Is this? No. We've refined it. Yes. Cool. Does the POI break structure? Yes. Does the POI have interaction? Yes. Does the POI come from an area that's a liquidity grab, right? And by area, I mean, like, this here is viable to say that this area was a liquidity grab, right? Because we run this high, and we created like this whole range and then continue to drop off, right? So we do have some form of liquidity grab there. Does the POI have inducement? Very definitely, right? We create these lovely equal highs below it, right? And more specifically, like, this would be the level of inducement for me, right? Like the POI in the previous day. Is the POI in the premium discount of something relevant? Right, well, this is our last real significant push, right, since we broke the range. So, yes, we can classify that as relevant, right? We also have other ranges at this bigger leg here that we could say, no, it's not, but, you know, we've got something where we can say, yes, that is a relevant level of premium discount, right? This is a significant push. You know, we've got a nicely formed high here, so, yeah, this could well be the next place to high comes in, right? And then we all know what happened today, right? But it's always these questions, right? Like, there were a couple of good examples of, let's remove this, of POIs that didn't work. Actually, here, this is a good example of one that doesn't have everything, right? You wanted to talk about this one, didn't you, Lewis?
Yeah.
But, yeah, is the POI visible on M15? Well, yes. Is it a engulfed sales by sell? Yes. All of that's good, right? Does the POI break structure? Yes. Does the POI have interaction? Yeah, we could validate that from this. There is a low broken here, so it validates the supply. Comes in, reacts to it. Is the POI from a liquidity grab? Yes. Does the POI have inducement? No. Right? Clearly nothing in the leg. Right? It's just that clean push. So what you've got to be thinking here is, who's taking the other side of my trade, right? Because there's no one here. Like it's just one clean push. There's no level of liquidity, so likely price will seek the liquidity below those, especially if it disregards the decisional level, right? There's, so that one's invalid, right? There's another great example of an invalid one. Or here, this is a good example of another valid one, right? Like, okay, so PI visible on M15, yes, right? Is the PI engulfed? Yes, all of these good things, right? Or here we can refine these to lower time frame ones, Does the PI have interaction? Yes, we could say that does. It comes in to these wicks here, right? Reacts to it, fails to put in the high. So the whole theory of this basically, right, is that what we're seeing here, we're seeing like a bunch of buy orders enter the market here, right? They initiate out of the high. We get another range, so that's another buy order, right? We get another range, another buy order, right? Price continues on up, price comes out for the first time, attempts to run that high, gives us that liquidity grab here, right? Comes back down into here, right? Into the bottom of this range here. These buyers try to hold the range once more, right? But they can't because price is too high or whatever. And all of a sudden there's this massive influx of sell orders, right? And that creates this imbalance in supply and demand, right? So when price comes back to it, there's going to be all of these unfilled orders because all the sell orders haven't been fulfilled here, basically, right? Price comes back in and off it goes on its merry way. Right, it comes back in, even, well, here we don't necessarily have a valid POI here, but we can, use LTF confirmations from here basically because we've already mitigated something significant. We do get like a little change of character down here. We get another one back, but that's just, this is the other thing as well, right? Don't always get trapped in thinking, it's changed character, Work with your higher time frame narrative. Like if you look at that whole trade, right, we're high in this whole range, right, like right at the top of it, right? Does it really make sense for price to continue to run high from here, right? If it's like, especially if we get a reaction here. Yes, if we don't get a reaction here, then, there's no trade. So yeah, it could go. But if we get a reaction here, which we get, really nicely, and we can go and do this whole refined POI thing again here probably. And yeah, we can say, right, yeah, to come back to that. You're supposed to think about that. That's the decision. But yeah, like over here, we can go, okay, cool. Well, what do we have over here, right? Well, here, let's find our POI, right? So now we can do this on like lower time frame, right? But do we have an engulfed like sales by or buy to sell? No, not here, right? We don't have anything. So we can go through some different time frames to look to see what we've got. No. No, so we might need to go down time frames in this case. We've got these buy to sell wicks, so that would essentially be our range and the extreme above, of course. Well, the extreme is the engulfing. Right, that comes right into the bottom of that. Right, but it's that power of like using time frames, right? Nothing clean. Okay, cool. I'll look somewhere else. Nothing clean. Okay, cool. I'll look somewhere else. Like nothing massively clean here either, right? Comes to that wood. That's a weird one, but yeah, you can keep going down and refining. But yeah, it's just looking at it in a logical fashion, right? Does it have everything we look at? Because there's so many times, right, that people will go like this, for example. Right, if we stop price here. Right, we can look at this and we can go, oh, looks like a nice POI. Right, we've got a level of inducement below it, right? It's an engulfed buy to sell, etc. Right, etc. Sorry, I'll say that. But yeah, but now let's follow this flowchart, right? Is the PI visible on M15 minimum? Yes. Engulfed? Yes. Does the PI break structure? Yes. Does the PI have interaction? No. Right? Because we miss a mitigation over here. So essentially this is coming off some random imbalancing over here. There's probably something 1M, right? But one thing you can't, or one thing you should never do, you can do what you want, but one thing you should never do is work down time frames to validate something, right? If, say, this had tapped into like this range here, right, we could go up to validate it. So we could go and find this range on 1H, right, and say, okay, well, that's a whole POI, so we've got interaction there, definitely. Right, but here we shouldn't be going down on the 1M, searching for what this is mitigated to validate a 15M flip. It doesn't make any sense, right? I'm not working with the same volume of orders because obviously a higher time frame candle holds more volume of orders because it's a longer time period, right? And now we can go, is it an extreme that breaks something? No, because we've got an extreme up here, right? So this POI is invalid. Don't look at that, right? We look up and we go, okay, well here. And this is another like interesting thing as well, right? Something I've noticed a lot recently is if you get a candle like this that engulfs multiple candles to the left, right? That essentially becomes your range, right? Because this is your whole engulfing, basically, right? So now we can go down time frames and we can look anywhere within that range. Right, now, where's our, specific POI in this case? Well, it's here, right? And again, notice how we can go, okay, if we follow this, right, forgetting about the 15M, right, is it an engulfed POI? Yes, right? Does it break structure? Yes, breaks here. Does the POI have interaction? Well, on initial inspection, no, right? But we can work up time frames. Right, and we've got this wholesale to buy here that this very neatly taps the top of and removes that. And we can go and find, we can see that's a demand range, right? Like, but you can go and validate that. It will probably be something on some random time frame. 9M, 10M maybe. Yeah, 10M. There we go. There's your right? Like it's always there. Trust me. Like the amount of times I've spent looking for this it's always there. If it's valid, it's always there. Right. So is the POI is the POI or the area liquidity grab? Yep, runs this high. Right. Does the POI have inducement? Very definitely here. Right. Is the POI in the premium discount? Yep. Cool. Like it's got everything. Right. So there is your refinement. Obviously, if you get like nice 1M PA away from the high, right? But it stops you looking at this, right? And taking, L's shorten it or break even shorten it or whatever, right? Price continues to play out. Right, it gives a bit of a reaction from there, but eventually, everyone's getting in here thinking, oh yeah, sure, it's going to hell, taking out liquidity, right? When really, all price is doing here is generating liquidity from an invalid POI to continue to run higher, where potentially we could have been looking for loss, right? To run the high, right? Price taps in, and this is where you can be like super aggressive, right? And this is where coming here about the clock. No, not even the 15 minutes. Okay, great. Well, that's where you can get on the seconds, right? When you see that sort of stuff. Or maybe if I go here, see if we can trick it. It's going to take ages to go back. But yeah, you see what I mean? Like, so if you're following that flow chart correctly, right, it stops you looking, or it should, in theory, stop you going like, okay, well, over here, you know, I've got POIs, you know, like here, yeah, you could look at this, I mean, but it doesn't give you an engulf candle, but yeah, there's probably something relevant in here, right? But if we look at this, we've got this better price one that does everything we want, right? The area runs liquidity in and of itself, right? Runs this previous high here, gives us a tap in. We've got an engulfed. Again, notice the fact that we get more than one engulf candle, right? So that's our whole range there, right? Price, yeah, like it's mitigated a little bit, but ends up running that high using that as inducement. And then we can look at like 1M price action there instead of second price action, because we haven't tapped a refinement, right? Like I personally, I wouldn't like, I know it comes to this wick, but it's very unlikely that I would personally pick this wick. Like, it's got equal highs below it, stuff like that, but it's, yeah, I don't know. I'd be looking at it personally, right? But I'd be more than happy to take this off, like, down here, right? Cool, what have we got? Well, here we've got flip here, right? That initial change of character here. So, you know, yeah, this PR is valid. We could probably short from here. We take a break even, right? But this is that whole thing of you are going to take break evens. You are going to take losses getting in trades, right? We're working with 1 pip stops, 2 pip stops, right? You're not always going to get that right. Like it's not possible. You know, if you want to always cover the high or something, then yeah, cool. But for me, that's not the point of trading, right? But then yeah, cool. We've still got, and if we follow this chart again, we've still got this valid POI here, right? Comes from liquidity grab. Does it break structure? Yes. Breaks this low here, right? Price comes in, has inducement like here, creates liquidity before it, right? Premium of this whole leg, and off price goes on its merry way.
Sam,
Yes.
on your original 15, where you were looking at for the 15 POI, and you said not to look at that one, look at this one. I think I've just of the very original position. I don't think it was this one. It was the one that you were trying to go back to.
Yeah, this one.
Yeah. So essentially, what you're saying is, it's the area that reacts to the last demand zone and then pushes through and breaks it.
Yeah, it doesn't always have to react to a demand zone, right? Like, if it's an extreme, like my sort of theory around it, right, is that we're looking for transactional areas, right?
Yeah.
Like areas we've actually seen exchanges between buyer and sellers, right? And someone's taken someone out of the market, right? Here, we don't see that interaction, right? Price just comes into thin air, basically, right? Here, this doesn't give us any real interaction, right? But it's a run on liquidity, right? Which, in theory, like, you got to think, like, what happens up here, right? When we run these highs, and I think we run, like, other highs over here. Yeah, we run these highs here, right? What actually happens here? Right? Well, a bunch of sell orders get filled here.
Yeah.
Right? It says buy orders above here. Right? So buy orders get hit, sell orders get filled, sell orders take over. So this is actually a transactional area. Right? As well as a flip being a transactional area, because you've seen that interaction, like, you know, like here, right? I mean, here, yeah, it's the same thing, but here you see this, right? The reason it doesn't need to make it all the way back up there is because here's our previous buying range, right? Our sell to buy that breaks the high.
Yeah.
Our price comes in, reacts, absorbs all of those buy orders, right?
Yeah.
All of them with sell orders, and then all of a sudden there's way too many fucking sell orders in the market. So the market hunts for willing buyers, which it finds down here, but not enough to prop up this because there's all of these unmitigated sell orders here, which is why price continues to melt.
Yeah, that makes sense.
So it's like when you're seeing like that's sort of how I rationalize it, right? You're like basically what we're looking for, what we're trying to find is areas of unmitigated orders, right? So that when those orders get filled, we can get in and ride that specific transaction essentially down to the next level that we think it will come to. Yeah?
Yeah, that makes sense. Because the way it makes sense in my kind of mind, am I okay just to doodle? I'll be 2 ticks.
Far away.
Because price comes up here and it pushes down.
Yeah.
And essentially this area here is taking it. And if the market would have bought up, it should have bought up from here and gone.
Yeah.
So essentially all that's done is this is just liquidity and then it's just come to seek orders above to sell.
Yeah.
This was your first indication for the sell. And then you've just managed to be like you are an absolute master of your craft and find the candle that sort of business.
It's just finding it, like it's just being specific, isn't it? It's just thinking about, like, trying to think about it logically, right? Like, the reason that we refine things is to find that last unmitigated area. We're not always going to be right, and it's not always going to come there, you know, because the market does do what the market wants the whole time, you know, like, we never really know what it's going to do, right? But here we can be like, this is the only area that I'd use like seconds to get in, right? Because here, this whole area is too large, basically, right? This is, you know, however many pips that is, right? 9 pips. I mean, in a 9 pip bit of price action, how many fucking flips and chocks do you see on the 5 second?
Yeah, a lot.
You know, like, it just messes around the whole time. So we're just trying to work with these very small areas of invalidation, right, where we can be very aggressive, right? Because I personally, and this is just me, right, some people would be comfortable setting a limit on this, right? And that's absolutely fine, right? But, and if you want to trade that way, like, if you can, like, when you get good at, you know, reading the whole narrative, right, and you get really good at picking precise levels that you want to trade and you're not looking, right? The whole idea is that you don't want to be looking here, you know, with these areas, right? Because you just end up taking way too many hits, and then by the time you get here, you're not willing to take the trade, right? And, you know, you're like, say you've got 2 refined areas in here, right? I mean, here you'd actually, trade, no, that comes this way, but yeah. You know, you're ending up cutting, like, win rate isn't necessarily important.
Yeah.
Right? Like, but it helps your mindset, right? So it depends on you as a trader. Like, I don't really give a shit what my win rate is, right? Because I know my RR makes up for it, right? But if you like to be a little bit more cautious or whatever, right, and you like a higher win rate, then just really, really selective over your POIs. You know, you won't get as many trades, but how many trades do you really need a week? You know, like this trade over here, that trade today, right? If we just go and like we just go and break down this whole trade today because it's a very good example of good POI selection, right? We could go, okay, here's our supply level, right? We work this out intelligently. Right, so now what we can go and do is we can go and refine this, right, to something specific. Right, and if we just work this backwards, so now we just want to go down time frames, right? And this is like just how you select stuff, how you refine stuff, right? We go down time frames. We've got this, but again, like this could act as liquidity for like the mitigation of the EQ of that wick, right? Because that never got mitigated. So, you know, we want to go down and see what we can find in here. We've got this 4-hour, it's clean, but yeah, we've still got this. So, and it's important to understand that this level isn't done until this goes, right? You know, we can keep going down and we can say, okay, well up here we've got stuff. Now here we've got all of these equal highs, right? If we really start delving into this, right, we probably say that it's probably not going to stop here. It's probably going to seek the liquidity above that. It makes sense at that point in time, right? This area has come from around liquidity, so we can keep going down. What we've got here, well, right now, we can see we've got this buy to sell here. Right, so we've got this wick straight above all of that. So now we can keep going down. It's just about finding that thing. Right, you just keep going down. You're working. Yeah, you can see you've still got this wick here now, and you've got buy to sell. Gets somewhat mitigated. The EQ of this isn't mitigated again. So let's just keep zooming in on this. Right, but you notice how, like, I'm not starting from the 1 end, right? I'm starting from that start from 12 hour, right? And then the lower time frames we get to see more information, so we can invalidate like anything below these equal highs, really, because, you know, equal high is probably going to get run, especially if we've got something unmitigated here right now on this time frame. But what we can see that last flip here. Right, comes into these buy to sell wicks, react, so yeah, there's something in there. You would guess. It gets tapped on, which is anything on one.
Sam, can you say a few words about like the engulfed candles? Because we speak about it so much, but it's like one of these things that I understand, but then sometimes I feel like there's deeper maybe meanings. Could you just kind of go through it and the significance of it and the meaning, and like what do you refer to as engulfed ones?
Okay, so engulfed for me, right? First of all, this is engulfed, right? Like anything that has the low of the candle, right, broken and closed below, right, or above, right? It doesn't have to take the high here. Right, but it needs to, do you see what I mean? Like it engulfs the body and then closes below, right? Like here, this is engulfed, right? Also, this is engulfed, right? But this takes the low and the high, right? But it's always closing beyond, like, let's go and find one that's not, like this here, right? Not engulfed, right? Because that takes 2 candles to do it. It should just be the first candle afterwards, like this here, right? Okay, yes. The wick trades above this, but the body doesn't, so this is not valid for me. Right? Honestly, the logic is it's just you've got that buy to sell, right? So that is essentially someone forcing price up to sell more to force price lower, right? So it's if they're doing that, the reason I want it to be engulfed is because they should do that with enough aggression to engulf it. Right? If they don't, then likely it's not going to be that kind of. And yeah, I don't. It just always comes to like it's one of those things, right? It's kind of like dojis. Like I don't know why dojis work so well, but they fucking do. Yeah. And then,
yeah, dojis do. So can you show a few more examples because your screen is longer, so it doesn't show straight away on mine because I have to kind of follow it.
Right. So, okay, this here, right, is engulfed, right? It closes below the low of the candle, right? Here, this would not be engulfed, right? Because this doesn't test the low of the candle, right? Same as here, this would not be engulfed because it doesn't close above, right? Whereas this would be engulfed, right? Because this runs the low and the high, right? Here this isn't engulfed, right, because we get no close above. Yeah, this isn't engulfed. Yeah, this is engulfed. You know, like it varies where they are, but yeah, like here this is engulfed, right? This is not engulfed. It's like, yeah, like I don't really know how to describe it better than that.
Well, so basically, that let's say a buy one, which sort of closes like further after a sell one and vice versa. So it has to be bigger.
Yeah, exactly.
It hugs it. It hugs
Yeah,
it,
exactly.
and it's kind of
Yeah,
okay.
it has to like eat it basically, right? It has to take the
Yeah.
bottom and not back and not close within that candle.
Yeah, so the next candle close has to be lower or upper than the open of the previous one, yeah?
Yes. Yeah.
Basically.
Well, then the wick of the previous one. It has to take the whole wick of it, right? Because here we get, well, no, here's not a good example, but where's one that wouldn't be valid like that?
And it means to us what exactly? Once again, we want to trade from those.
There's a large influx of orders there, basically. That
So,
someone.
They operate the same as the dojis.
Yeah, exactly. Like
Okay.
it'll be a doji on a time frame probably, right? But here, this would not be an engulf candle, right? It closes below the open of it, but it doesn't close below the wick, right? So this is not valid. Yeah.
Okay, so if you have this, because why we are choosing the one that are engulf is because we have some point of interest, yeah? So if you don't see this, like here, you won't be looking at this at all as a OB.
Like you should be able to find on a time frame an engulf candle, basically. If you can't, then the level, I mean, from my experience, they don't work as well. You know, it's like this is a great example. Sorry, go on.
Can you go to the time frame that was before this? I think it was the 1 minute, I guess. There was a candle right there. Okay, so let's say now the engulf, not the engulf candle, the candle that engulfs a candle. If the wick trades above the engulfed candle, does that invalidate the engulfment or no?
I'm not sure what you mean.
Wait, let me try to find it real quick. It was right there on your screen. Okay, do you see that really sharp drop? Go to the left just a little bit. Left. You see that really big drop? The one under it, exactly. The next leg.
Yeah.
Okay, so do you see right there? There's a wick above that black candle before the actual buy candle. Let's say in a scenario where the black candle actually engulfs the buy candle, like the sell candle actually engulfs the buy candle, but then we have a wick above it. Is that like a liquidity graph or what?
That's absolutely fine, right? Like, so you would mean like, let's go find one.
There's one right there. Okay.
There's one at 8, just before 8:50, isn't there? Or 20:50.
Yeah, right there.
There you go. Up. Go up a bit.
Oh, here. Wait, no.
If you look at the like doji to the left. No, up. Yeah, there.
Here? Yeah.
The high and then engulfs the low.
Yeah, exactly. That's fine. That's perfect. That's valid.
All right, cool.
Like it just, it has to, like it can take the high and the low of the candle, right? But it has the crucial thing is that it takes the low of the candle, right?
Yeah, it's not essential. That's not essential.
Yeah,
Does that make sense?
Yeah, so a point like this, like what the guys just pointed out, would be potential somewhere for us to target as a POI.
Yeah, exactly. If obviously the other stuff was correct.
Yeah, of course, yeah.
Like this would definitely be something we look at.
Sam, can I ask you a
Right,
question about that first? Sorry, mate.
Sorry, go on.
Can I ask you a question about that first 4-hour POI you binned?
Yeah.
Today?
Yeah, so, I mean, we've talked about this previously, but that 4-hour POI that you said had no inducement.
Yes. Here, today, you mean this one?
Yeah. You would still mark that, because I remember previously you've said as long as you obviously it hasn't done in this case, but it doesn't have to have inducement if it manufactures it on the way down.
Before it, yeah. Like we could have, so one thing we could have had is something like a complex pullback to this, right? If we get like a really slow retracement to this, right? Then cool, fine. Then we can get like equal lows generated in here, a run into the extreme, a break of structure, and a continuation.
Yeah,
right?
So it's not a necessity after the POI has been created, if you like.
Depending on the on the price action afterwards, no, right? But it is it has to generate inducement somewhere.
Yeah.
Like if it doesn't, then most likely it's getting done. Right? Like here, once you start seeing that towards that, just do not get in the way of it. Let it do its thing, unless that's it, right? But once you start seeing it moving like this, we probably should have noticed this yesterday, right? That this push was way too clean, right? It doesn't it has this, but it's a long way away from down here. So once this gets disrespected, right? Price test it again, comes back, test the flip, and then drops.
Yeah,
right?
took a loss around there, I think.
Yeah, I think I took a loss in here trying to get long in here somewhere. I can't remember where. But I didn't have it coming. I didn't have it doing this, especially when I saw this high fall. Right, like instantly to me, like the way I sort of look at the market, that looks like cool. Okay, we'll probably pop off the decisional, right, and give a little break of structure in here. There was some nice refinements within this. I know a few guys took losses in here, right? It's not wrong, I don't think, personally, right? Because I completely get the narrative for price moving higher, right? But once you take the loss, you just need to sit back and go, okay, well, what's changed, right? Is this POI still valid? Probably not, right? We're just melting towards it at that point in time. So unless we see something significant, right, it's probably all getting done.
But that 15-minute demand that you just marked, isn't that inducement for the 4-hour level? Can't we look at it like that, right? Or do you need an inducement on the 4-hour?
Yeah, exactly. You can't validate higher time frames off on lower time frames, right? It doesn't work like that. You can't all of a sudden go, okay, well, here's a 4-hour level, cool. Right, on the 1M, I've got I've got inducement for this level I've got inducement for the 4-hour level on the 1M. Do you know what I mean? That doesn't really make any sense because you're saying that time frames aren't relevant to each other at that point in time, and the 4-hour time frame obviously holds a lot more information. So there's no 4-hour inducement for this POI. So once it reaches this, and once it starts moving towards it with momentum, right, 9 times out of 10, that's going to just die.
Okay, right? Makes sense. Yeah.
Because there's no 4-hour transactional area there. There's a 1-minute transactional area, and that's just going to be used to pull back a little bit to then generate some more liquidity to run to lower prices.
Okay, yeah, it makes sense. Right? Yeah.
But then it's we also get an interesting bit of PA to look at, right, is this bit of PA here, right? And it's important to really be aware of your premium discount levels, right? Me and Lewis had a massive discussion about these shorts here, these longs, we had a good discussion about all of this, right? But if we're looking at this, really here's our whole range. Right, here to here, that's the sort of 2 price points we're contained within at that point in time, right? And look where all the good trades come from, right? So really, you don't want to be selecting any POIs, especially not to hold within this level, right? Any trades in here should be short term. Yeah, this trade here makes sense, right? It's at the premium, we can short it, but we should not now be thinking that this is going to run low because we're range bound. Price will likely move up to higher in the range, right? Potentially to the extremes of the range before running the low. Right? So this whole area, you should be very cautious about trading, right? Sorry, go on.
On which time frame do you normally mark up your ranges? On the 1 minute.
What do you mean?
So let's say okay, so when I do my breakdown analysis, I go from the higher time frame and I go through everything. I find all demand zones and I understand where supply is going. But then when I start, getting more into the active trading and into the process, and getting more with the flow, I mark up the ranges just to understand, where is the premium and the discount. More of I execute in the 1 minute, so that's where I do it. So in terms of like marking up the ranges, on which time frame would you normally do it?
I normally focus on like higher time frame stuff, right? Like I'll more look at it like I don't really like. I'll take a trade from here, yeah, because we've got an extreme, right? But I don't like this whole trade. I know like I won't be sitting on the one, and when after I'm in that, right, I'll keep getting back on it if I see anything good happen, right? But are you talking about for like order flow and stuff like that, or?
Yeah, more like I guess like I treat ranges more in terms of like the order flow. So after I find all the supply and demand zones, on the higher time frames and the medium time frames. So when it comes for me to execution, that's where I find personally the ranges kind of come for me, as an additional confluence. That's sort of how it's set in my head.
That I'll follow it on one end, like order flow stuff like that. But we'll do a whole nother Zoom on that sort of stuff.
Okay, cool.
But yeah, like we want to keep track because we're going to put all of these in with the sort of videos and stuff. So we want to try and keep all of these topics quite relevant to the things we're talking about, right?
Okay. Yeah.
But yeah, do you understand all that sort of stuff about POI selection? Yeah.
I would have a quick question about the POI. So, for example, in this area here, let's just for the sake of it, just look at this here. Sometimes we have the actual buy before the sell, very small, and then we have something like this wick that comes down here, and then we have the actual POI, and then it breaks down. And I was wondering, like, when do you opt for the smallest possible, so to say, engulfed candle, so like here, and when do you say, okay, we probably have a larger range where I want to cover?
The thing is I'd always look at it as this is our whole larger range, basically, right? This is essentially our whole sell to buy. This will be a higher time frame POI, right? So if we go up time frames, we can probably find that on, probably have to type in like 90 minutes or something here, right? But we can see that we've got, I wonder what time frame that is on. 45. What does that need then? That needs like 2 point, so what's that, 100 and... Yeah, I'm not recommending that you do this, but it's just an interesting...
3 hours, I think, maybe.
You think 3 hours? Yeah, it might be 3 hours.
Yeah, because you have 3 candles that are engulfed, but kind of. Yeah. No, not really.
So here, I would probably look at the way I would say, if I can't find anything else, right, I'm going to go with the last available bit of information I have, and I would say that is potentially the higher time frame POI, right? But now, it's like with 15-minute POIs, we refine, right? So we can refine other things. So if we refine that, there's our last engulf candle. There's our last engulf candle within the engulf candle, right? So that becomes our significant POI, right? And then we can break this down. I have no idea whether this hits anything, but see. Then what do we have within here? Well, now we would be looking at potentially these, because we've got that little reaction to that range there, so potentially that, and very definitely that.
Because that's the area that took the last interaction that pushed price higher.
Yeah, exactly.
Yeah, I see that absolutely 1,000,000%.
it, right? Comes into here. Push.
Sam, in this example, because you don't have any buy candle within this range, that's why you choose the upper one, yeah, the only one upper one, and
yeah, exactly, yeah.
Okay.
Because there's nothing else there really, right? So now we need to see what happens when price gets back there, and that's where you need to make a decision on. I think this hits really like late or early in the morning, something like that. But it may well not come back to that, but these refinements are just where we use the second. I don't think we'll be able to get that. Oh, we might be able to. This is not direct. See? Like hits the last single candle, like to the T. Right? And then we can see here, right, if we were awake at 5 in the morning, you know, we get chops there, right? We get interaction with the previous demand range here. Right, so again, the area has come from a run on liquidity. Yes, we have formed liquidity, but you know it's not the most significant thing. Right, we form liquidity. We run liquidity here. Right, we come into this demand range here. Wrong thing. Right, there's your flip. There's your failure. Right, so you can take the whole last range. Then for like 5 minutes you sit and you swear at Sam because you're sitting in drawdown and you know creating all these equal highs and you're pretty sure you're going to get swept at that point in time. And then all of a sudden price starts to melt.
Can I ask you a question? You know, here the refined area that you mark is the last 1 minute engulfed in that whole supply range. Would you still take seconds at this area if you had 1 minute engulfed above in the supply range, if you know what I mean?
Yeah. Like if it's so say we got say we had
something engulfed above this level.
Yeah. So say for example we had an engulfed buy sell there, right? Yeah. Then we had this, but I saw the correct 100% I'd take that.
So you will take a second at both.
As long as it doesn't violate the POI, right? Like if it even wicks above it, then the level's dead. We go back to 1M and wait for it to hit this, or we wait for 1M price action.
Yeah, and you know when you choose these engulfed candles, the refined ones, do you still go through the flow chart? Like, do you look? Is it engulfed? Yes. Does it have?
I don't really look at the flow charts a bunch anymore because I sort of know all of it off the top of my head, right? But yeah, it should all
it should meet all those criteria.
Yeah, exactly, right? So again, so if we just cross off the top one, right, is the POI engulfed? Yes. Does the POI break structured? Very definitely. Does the POI have interaction? This interacts over here, right, with this.
Yeah.
Right. Is the POI liquidity grab? Very definitely here. Does the POI have inducement? Down here we have some form of like relative equals here. We create all of this. Obviously this is a long time away, so ideally we want to wait for some other form of liquidity, but it's the POI and the premium discount, right? And it just stops you, I still do it, don't worry, we all do this is trying to make it as bulletproof as possible, right? But we still do dumb shit as well, but it just should stop you looking at this and going, do you know what, right? Here's a great level to trade from, okay, cool. Like the PI has, it's got interaction, yes, cool, right? Does the PI break structure? Yes, brilliant, right? Does the PI, is it liquidity, right? Yes, right? Is it in the premium disc? No. Okay, so in theory, now, especially if we're in a larger range like this, we now definitely shouldn't be looking at this for shorts, right? Just because it's in the discount, right? In a range, it doesn't make sense to take sales. Like when we're seeing continued order flow like today, right? It sort of makes sense. Sorry, you can probably hear my puppy yawning. Here, we don't necessarily need pullbacks to the premium and stuff, right? Because we're just respecting all this order flow on the way down. right? So we can just play those most recent POIs, and these are all going to be high time frame POIs, right? But you can see we just keep creating this, come in, create this. You know, like at that point in time, the PIs don't have to be within the premium discount because we're during an impulse, right? It doesn't make sense that, you know, if we read this correctly and realized that it was likely going to be a continued run from daily, right? It doesn't make sense for us to be going, okay, well, here's our range, let's wait for it to fall back to premium. Here's our range. And then we're just sitting there again with our dicks in our hands going, oh, well, you know, yeah, we could have got in all of these, right? But it's very different from trading something like this or like this to trading something like this, right? And the hard part is really spotting when this is about to start happening and just going, okay, cool. But like here, right, does it really make sense to continue taking buys if the buy here and here has failed, right? Doesn't make sense to keep trying to buy within here, right? We wait until it gets down to like here, right? Or we just keep selling, right? It's gonna hit. Oh, sorry, mate.
I'm really sorry. I just have one really quick question. Sorry to interrupt you, but I just want you to hold this thought. Now, this is going to be a little bit off topic because we were talking about POI selection, but now, for me, I've been doing SMC for like not a long time, right? And I know the basic concepts, but then the problem that I'm having at the moment is that the information that I'm getting fed right now by you and all that stuff, like, is really overwhelming. And I think a lot of people can agree here. So how do you recommend a way to actually be able to effectively study all of this stuff and start applying it in markets like Reach to accelerate learning?
Take each of the concepts apart separately, mate. Like, go and look just at structure, right? Go and just look at a chart, right? And go, okay, how does 4-hour structure and 15-minute structure interact, right? Like the diagrams in the PDFs, right? Like, here's your 4-hour structure, right? Then we can go down and look at 15M structure within that, right? But just take that part. Don't look at supply and demand. That's the most significant at that point in time, right? Just focus on what structure does and how you can capitalize on that, right? Then go and look at like this flowchart, POIs, stuff like that, right? Learn how to start selecting good POIs that make sense with the stuff you've just learned about structure, right? Then go and test liquidity and see how all of that makes sense with everything else, right? Like, take them apart separately, basically. Right? That's the quickest way you're going to get results, right? Because you're understanding. That's how you start to build narrative and build stories, right? Is, can you read structure well? Yes. Okay, so have a structural idea, right? Like, again, it's like I always say, like today, right? Structural idea. Okay, we just had a break of structure, so we can expect a pullback at minimum, right? Liquidity or supply and demand levels. Yes, we're coming into this really nice refined POI, right? Liquidity very much makes sense. We've got equal highs here, and we've got like some form of, well, we've got equal lows across here, right? So it makes sense for price to grab that, then grab this, right? And all of a sudden, this whole day that everyone's been saying makes, you know, like the PA doesn't make sense, right? Because we've just run this, starts to make a bunch more sense, right? That make sense?
All right.
If you take everything separately, you're going to make a lot faster progress than, because you learn to be able to build each bit of narrative on top of each other rather than just going, okay, well, I have no idea how I'm approaching the chart. So what I'll do is I'll just look at chart and I'll go, okay, well, here's an unmitigated level. So I'll just drill that in and I'll wait for price to get there, and then all of a sudden price does this, and then you're just sat looking at it going like that because you haven't really built everything from the idea that, you know, this is actually broken structure a bit, right? And it was this.
And what about your trading times, your trading period sessions? What do you prefer? What times? How do you
to do that more, mate? I used to trade like I'd sort of be on the chart from like 7-ish, looking to trade from 7:30 till about 9:30, 10. Then I'd have a couple of hours off, come back for sort of 11:30, something like that, and trade like New York Open. And if I'm going to trade sessions, that's still what I do. A lot of the times now I'll just set I'll just set alerts on POIs that I like, and just wait for price to wait for one of those alerts to, because it stops you, you know, like if we're looking at all of this today, right? How much of this price action do we actually need to pay attention to, right? Like if we break that down today, right? So we've got two structural ideas here. One is that we're going to get a retracement, right? One is that we're going to get a continuation, right? So the continuation idea, right, comes actually from here, right? We get, looks like there's quite a nice long in there, right? Yeah, around 7:45, right? But then, like here, we can just go, okay, well, let's, you know, our structural idea is we're potentially going to see a deeper retracement, blah, 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 right? So now let's follow our POI thing, right? Okay, cool, what do we get? Okay, well, we get this, right? But this candle engulfs both of these, so really we want to look at this whole thing here, right? Can we find a time frame that's relevant on? No. There is one.
It's a 25-minute one, I think, because I was looking at it earlier.
25. Well, I like it. You got to use an even more weird time frame than me. Yeah, there you go. 25 minute. I love this. Yeah, perfect. Like literally beautiful. Right, cool. So we found that one engulfing, right? Does the POI have interaction? Very definitely, right? Comes into here. Reacts, fails. Does the POI come from there as the liquidity grab? Yep. Well, here is liquidity grab, and we can say this is running like liquidity above these previous highs here. Does the POI have inducement? Yep. Here. Right. Is it in the premium discount? Well, it's very definitely in the premium with this whole fucking massive push that we had yesterday. Right. And there you go. There's a top.
Sam, the question related to this continuation idea. This is not the discount area for taking a trade. Is it not relevant here?
Now here.
No. First, when you start marking the chart, you said that we can have two ideas in the morning. Yeah, one is a continuation, and you mark this the first rectangle.
Yeah.
And you said this is a continuation trade. But it's not in the discount, so why we would like to look for the buys? Oftentimes
you won't get price. If it's going to continue up, oftentimes it won't pull back. If it's like really good motor, right, which this, to me, this morning looked like it was going to do, right, you've got this liquidity up here, so London might well just open from here and then move, right? You see it like all the time, right? Like,
okay, you don't have to search the examples, I understand. So sometimes it's better to risk, yeah, even if it's not in the discount.
Yeah, exactly, mate. It's about covering both angles, right? It's that whole thing of you don't have a bias over whether you're buying or selling, right? Because here, right, like if we look at this whole morning, right, the best way we possibly could have traded this, right, is to take the buy from here because it's right. I would guess there's a buy in here somewhere, right? Take the buy here, cover yourself with the sell, right? So one of these trades will work out, right? We don't know which one it's going to be at that point in time, right? Because who knows what fuckeries the market wants to get up to on a Friday, right? But yeah, take the buy.
The buy was really valid.
The buy here.
The buy was valid. I took it. I got like 16R, I guess.
Yeah.
It was pretty valid.
Yeah, it's a very good buy. Like it's definitely valid, mate. That's what I mean, right? Like, and we don't know here whether this is going to continue to run these highs, right?
You know, when EU trades heavily, it usually doesn't pull back to equilibrium. I've noticed.
Exactly. Like if you look at this whole thing here, right? If we're always saying, we only want it to come into premium, we're missing all of these continuations in this leg down here, of which there's hundreds, right? We even miss this because it doesn't pull back to premium of like this whole leg.
Okay, makes sense.
Right? Like, so it's like when you're taking continuations, if it's going to continue, right? Not that, again, if we look at this, we can say we've had impulse, this is the correction, this is going to follow through to be a new impulse, right? Like if you've got enough favourables on your side, then cool, right? So if we just look at that, the only real thing we have against taking that buy, right, is the fact that, okay, like if we break down this, right, is the PI visible on 15M? Well, yeah, it's visible, right? It's not valid, but does it have interaction? First things first, yes, right? It taps into this. I guess this over here, just above that, these little wicks here. Right, it taps into some form of supply. We can say that's a bigger supply range, right? Cool. So now we can refine the POI. All right, we can go and find whatever it is really relevant on. Yes, that's probably one. Yes. Right, cool. Do we get anything engulfed? I'm not here, so maybe we go up a time frame, maybe go up another time frame. There we go. Right, so there's our POI. Right, the area, is it coming from liquidity grab? Not massively. I mean, the whole area has been a liquidity grab. Right, but yeah, then we come in, we create inducement there for it. Right, all of that liquidity there, again. Right, price continues to do its thing. We trade this.
Sam, just to confirm, so FUs, engulfed, and dojis, they all serve the same role, and we treat them the same. Yeah.
Exactly. Okay. Exactly. Right. So
some real quick question.
Yeah,
regarding the discount and the premium pricing. So for the trade, the buy right here, are you using there's a video, right, that's called intraday pricing theory in the video access.
Exactly.
Is this the basic logic behind it though, for the buy? Because if you look at the grand scheme of things, we're actually in premium, right? Like from that swing structure.
Yeah, we are indeed, right? But we're looking at this, right, and we're saying London, or like coming into London, Frankfurt has traded to relatively low prices compared to what Asia was, right? So we, in theory, can take a buy here, right? But yes, we need to understand that we are in premium and sells are still very valid, right? So we can take the sell from up there as well, right? Either you take this, depending on how you manage, right? I mean, and again, like we'll do another one on the management flow chart, but there's a thing in this that says, can we logically expect this to be a turning point in the market? Potentially not, right? We can potentially see this more as a reaction point to mitigate this to move up, right? So we should be pulling partials up here somewhere.
But I mean, it's just confluences, though, isn't it, Sam? I mean, you've just said there was no liquidity grab there, really, but does the high time, does the narrative make sense? I guess the more things you have on that chart is more confluences.
Yeah, exactly, right? You need to. There's a couple of like really key ones there, right? Like it either has to be a liquidity grab or it has to be an SD flip, right? Otherwise, we're just looking at everything, and again, that like gives us all of these like shitty people like over here, right? That we end up taking losses on and then not taking this trade. So it should. I'll try to get this updated so it's a little bit clearer. I need to figure out a way how to make it a little bit clearer. But yeah, there are things on here that aren't essential, right? Like imbalance, not essential, right? Break of structure, essential, right? Is does the PI have interaction? Not essential if it in itself is a liquidity grab, right? Is the PI a liquidity grab? Yes, so this isn't now essential, right? Does the PI have an inducement? Well, it doesn't have to have inducement, but then it has to generate liquidity beforehand, right? I'll try to get this a little bit There must
Yeah.
be.
No,
So,
no.
15-minute shortcut hours.
Sorry? And
Tom, quick question about your change of character. Can you run us through your change of character on the 15 minutes? Of course, after you finish your current point.
there, look, that is in the discount of this push, right? Here we've got this sell to buy, so we do have some form of price range here, so it is in the discount of something relevant, which is why we probably get a move, right? Because it's well priced enough. What, the change of character up here?
Yeah, so when you're looking at your narrative, if you've got a change of character there, you know, really nice.
Low here. That's me. Right, because it's that order flow thing then, right? If we're looking at this, right, we've got this range here, right? Gets taken out, gets mitigated with this range, right? So this is your change of character. When the low of the range goes, essentially, right? So it'll be this low right here. So once we get that, then we can start looking and saying, okay, you know, a bit late in the day, you know, after sort of 7 o'clock, I wouldn't advise anyone trading at that time, right? But then we can start looking, right? Okay, now we can start looking at that PR. Okay, is there anything visible on 15M here, right? Well, here, there's this here, breaks this. We've got this unmitigated wick at the top, which I'd always be interested in having a look at.
Look at the 1 minute in golf there. Sorry.
Yeah, maybe, mate. But we don't just that's the whole point, right? Don't just go straight down to the 1M. Like, work the story logically, because you might miss something in here.
Yeah.
Okay, here, right? I think people would be looking at this, going, it's an SD flip, but it's not, because this doesn't break anything, so there's no demand here.
Mm-hmm.
Right. So here we've seen some form of demand taken out here on the lower time frame. You can tell because there's that sell spike, right? So what we're seeing is price do this, something like this, right here, but we're just not seeing it on this time frame yet. So when we go down time frames, we will probably see something there. Right. Again, not a valid area because there can't be any demand here because it didn't break anything. Right, so what are we looking at here? Well, this doesn't actually break anything in and of itself either, right? The break at this level comes from lower, which isn't an SD flip. So this should automatically be telling us that this whole thing here is horseshit, right? And is not going to get respected at all. Price will seek something up here. Right, and then we can go down time frames, and we can just look at work. And there we go, we've got that.
Sorry, Sam, why did you say that was horseshit? What made it not valid?
So here, right, this level here, so let me remove these drawings, right? So if we look at this, right?
Sam, if you want to delete something, you can press the middle button in the mouse, and you will remove the.
Oh yeah, of course you can. Yeah, nice one. Thank you, mate. Right, so here we would look at either the extreme or the decisional to validate one or the other, right? So extreme here breaks nothing, right? There's no breakage structure from the extreme. So that already puts warning signs across that, right? Also,
Can I have a question regards if something is breaking something? My understanding is that if you have the buy candle before the sell, so when can we say that something is breaking something?
So if we had this, like, say here, right, if we had something like a little low there that we can break, right? But here we get no low in this, right? Because all of these candles trade higher, right? So there can be no low here because all of these, this is one continued push, right? Like here, right, this we could more say breaks something, right? Well, it breaks here as well, but yeah, it needs to have a low to break, right? It needs to have some form of structure to break.
Yeah, but here you have a structure. Let me.
Here?
Yeah, you have a structure here, and you have this that make this push. So basically,
this doesn't break that. Look here. Where does the break of structure come from in this? The break of structure comes from this, right? Not this. This doesn't break anything. The break comes from here.
Okay, I understand now. So basically, if you have many bullish candle here, like here, so you're just checking which one was the last one before the break.
Yeah, or if the extreme has done something, if the extreme has done something, like we get a push like this, and we have a little low in the leg, right? Then the extreme breaks that, the extreme is valid, right? If we get a clean push like that, and then we get this, right? Most likely, we can still keep an eye on the extreme. You can always keep an eye on the extreme, right? Because there may be something on like the 1S that you're not aware of or whatever that's happened up here that is significant, right? So we can keep an eye on this, but we need to be aware that on this time frame it breaks nothing, right? The break comes from lower. Now, is this area a supply and demand flip? No, because this isn't demand, right? Because it breaks nothing in the leg up, right? So for this to be valid demand, we need to see something like this, right? And then price come back down and then do this, and then we can trade that, right? Because we have a valid demand level here because it's broken structure here. There's nothing for it to break, right? So this cannot be classified as demand. Therefore, if we have no demand, we can't have an SD. Make sense?
I think I got it, but I need to digest this.
It will be recorded, so you can go over it again.
Yeah. And also, I need to try to find my, own examples somewhere.
Yeah, definitely. I mean, this is just me. Like, if I was looking at this, right, I'd just be like, no, I'm not trading that. I'll trade something higher up here. Right?
And these highs look like inducement as well, no? For the.
Yeah, exactly. This high gets developed here, right, to create liquidity for this, and then over in Asia, whatever, we see, price come back into the exchange to trade about that.
I have a question. Do you pay attention for the candle with a flat top or bottom? They call it like unfinished auction in the.
I've never seen. Is that like
the candle without any wick on the top or the bottom?
Never really looked into it, mate. You mean something like this, right? It's just flat.
Yeah. So basically, on one of the community, the guy was saying that if you, for example, here you have a wick, like.
Yeah.
Here you have a small wick, yeah. But basically, if you have two equal candles without wick, probably they're gonna be taken out with a small wick because this is the unfinished auction when you. There's a. I don't remember exactly what was the course.
Yeah, I mean, I'd look at that as like equal highs, something like that.
Okay.
Anyway, so like that would, I get what you're saying though. Definitely. I've never really looked at it like that, mate, to be honest. But I do get what you're saying. Like I would look at that as essentially like, you see how these two wicks are just like relative equal highs, right? Like they're just liquidity that gets run later so the price can, come off and mitigate, right? But you see here, like this extreme, right? There's something valid in here because this trades straight down to take out, like even if it just took out this low here, right? It breaks something in the leg, right? It doesn't necessarily have to break the swing structure, but here, the first break, like if we just look at this, right? The first break of anything comes from up here. Right, this never gets mitigated, so we can keep going down and looking for something in there. Right, we've got that nice wick there. Again there. Right, we get that wick. Be interested to see if price actually does trade above that or not. I would guess it would. It does. comes to something in here. But you see again how this candle engulfs two things. Right, engulfs this and this. So now we could probably go and find that. There's going to be something in there. It's got to be. There's not. Yeah, there you go. Right, you've got this little thing up here. Doji. Yeah, I don't know why dojis do what dojis do, but when it comes back into that, to even tap that. Oh, that would fry my head. Well, that is going to fry my head. That doesn't hit. I can't deal with shit like that. Yeah, taps it perfect. Cool. That's my OCD good for the day. But yeah, does that make sense? Yeah, does all of that sort of stuff about POIs and how to look at them make sense to everyone?
Yeah, it's amazing.
Yeah?
Yep.
So much value, man.
Could we maybe look into this area here and look into the 1 minute refinements? Because maybe that's something where we could go through the checklist as well and see what you would see there.
Yeah, I took a loss in this. I was trying to get on here as well. See, that was a problem. Where was it? There was something nice and telling here. Yeah, right. So there's our initial candle, right? If we go down and we look at it, then, you know, the only thing we've really got, because again, like this extreme for me definitely isn't the most valid thing, right? Because it hasn't broken anything, like the interaction and the break of structure comes from higher. So let's go and see what we can see. 2 minutes. Super clean there. Right, yeah, I think I did happily look for longs in there, but yeah, because at this point in time, right, and again, it's just like, for me, at this point in time, we are forming some form of complex pullback. Yes, we don't have inducement, but we are creating liquidity here for that run, right? We create equals there, price gives us a tiny little reaction there. I think I took a loss on the second one there, something like that. Where was it? Gus actually took the same trade. But yeah, I saw this come in, generate liquidity here, right? Come in, react to this level here. So it was like, for me, again, it's that whole, okay, well, cool. Price is going to continue on down from here, right? Or continue on up from here. Price obviously didn't want to do either of those two things today, but yeah. So I have price up above there. Stayed in it for about that long and then didn't stay in it any longer, right? But this to me makes complete sense as a trade, right? It's a trade I'd happily take again. You know, yeah, okay, it's, you know, we could argue that daily blah 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 whatever, right? I don't know. There was just some news or something this morning as well, like, because this looks very news-like. But yeah, then price just continues on down. Right.
Perfect. Thank you. Perfect.
Me, that's yeah. That's
Is there any time you wait for active change on from to take your trades, for example, here? Like, if you refine like all these areas, you'll end up like taking buys and just reaction, you know. So, like, is there?
You can here, like, one thing I tried to get across in the other trading flow chart, right, is that really we always want 15M order flow on our side. Right, that's when the best trades come. Right, especially if you've got structure and order flow aligned, right? Then you're golden, basically, right?
Yeah.
So yes, there is an argument for saying here you could wait for 15M charge, right? You could wait for like this side to go because it will pull back as well. Like, well, it won't always pull back, but most times, if you've got like a change of character above that high, it will pull back into the previous range and then continue on up to take out those equal highs. Right?
Yeah, because if you think like we're kind of bullish, then if you like bearish order flow, so yeah, it's kind of hard to tell like where the price is going to hit.
Exactly, right? So here you either like you can if you've got your higher time frame narrative worked out well there, right, you can say that, okay, we could potentially be seeing a daily lower high being put in right now, right? But, you know, like, I'm happy to look for, so I don't want to trade against 15 MOF at the moment, right? But if we get a change in 15 MOF, I'm happy to take longs.
Yeah. So if we're kind of bullish and our flow is bearish, you would not like take seconds. You would prefer to wait for M15 shock, then ride the overflow to take out this high.
No, because I'm an idiot, mate. This is why I take too many losses. But in theory, if you want to be the safest trader you can, and you know your focus is on win rate, and you know obviously very high RR trades, right? You're going to get plenty of those a month that happen, right? And you really will get plenty of those a month, you know.
Yeah.
But if you want to wait for 15 of order flow and structure to be in your favor, right? Then yeah, like honestly, it's a better, more sensible, more risk-averse way to trade than half of the shit that I do. But yeah, I'm an idiot, as I said, mate. I don't know why all of you have decided to join my community, but you're stuck with me now, aren't you?
No, bro. So what you're saying is that you don't wait like for a huge shock. Basically, if we're bullish, we end up taking buys all in, or you refine POS, even take LR, you'll still take longs.
Yeah, exactly. But here, right, now, after I see this level get completely fucked, basically, right, I'm not necessarily going to be looking at this and going, yeah, I like here. Now I'm thinking, do you know what? This is moving with a bit too much momentum. If, like, at this point, I'd check the higher time from the daily and I'd gone, oh, do you know what? That may be the lower high. I'm going to stay out of its way at this point in time. Right now, I'll just wait for it to, you know, unless I get a 15M touchdown here, right? Then yeah, 100% longs, right? Like if we come into here, right, which you know we all know we really don't, right? But if say we've got like, say we'd had price action, you know, something like this, right? Like come up, made a little high there, done something like that. Then yeah, cool. You're definitely, I'll definitely be long from that.
Yeah, so and you would expect this high to go, like you wouldn't be targeting like those supply ranges. So
yeah, okay. No, like at that point in time, because we're bullish, right? 4H is bullish, 15M is bullish, right? We've got bullish flow now. In theory, this is the whole. It should respect every single range on the way up until we take out the high.
Yeah, makes sense now. All makes sense. Thank you so much.
No worries, man. Yeah, does anyone else have any questions about POIs, anything like that?
I have a question, Sam.
Fire away, brother.
You were talking about the sell that you took, like you marked the POI there, and I kind of get the reason behind the choice of that POI, but I just wanted to ask you if you could stress it another time. Why did you choose that doji as a POI for the short?
This whole thing is a POI, mate. Because, right, if I see something engulf two things, right, this gives me this as my range rather than this.
Yes.
Right? So, say this had just engulfed here, right, and closed here, then cool. We need to find, I really don't like the word engulfed. For some reason, but yeah.
Yeah, I get this, but my question was, why not, for example, the 2 weeks above and not seeing this as a liquidity?
This is another POI.
Okay.
You know, like here we've got a couple of POIs, right? But again, if we look at the flow chart, right? So is the POI visible on M15 at least? Yes, right? Is the POI engulfed self-buy? Yes, it is, right? We can say that's our whole engulfed thing there, right? Yeah. Does the POI have interaction? Yes, right? Because we react.
Yeah. This is the man.
Right? Is the area a liquidity grab? Yes. Runs this high here, right?
Okay.
Does the POI have inducement? Yes. Is the POI in premium discount or something relevant? Yes, right? Has everything I want ticked, right? Now this one hit. Right. Okay. Is the POI visible? Yes. Is the POI? Yeah. I would assume we'd find something on there. I'd be very fucking surprised if we didn't. Does the POI have interaction? that trade at the same level as that? Just wicks below that. We could say it reacts to this wick. There's something in there, right?
Yeah.
We could
Yeah.
argue the fact that there is definitely something there. Is the area a liquidity grab? Yeah, very definitely. Does the POI have inducement? Yeah, very definitely. Is the POI? Yes. It's valid. They're both valid. Right? So it's not necessarily like just discounting one. It's just like, I thought this morning, right, when I think I was chatting to Miha, someone like that, about it this morning, right? But when I saw initially, right, I didn't take the first short from here because I'd seen this chotch here initially, right? Then we got this chotch. I didn't love this flip here because we'd already broken this high here, right? So I thought it would probably come to something like this. I wanted to see a reaction from this. I didn't really love this level. So I just waited a bit. And then when it invalidated the high like that, right, my initial thought was we'll probably trade back down into here, right, and then get along up to here, right? Like, so I was thinking, okay, cool. Well, we've had this, right? Cool. This has mitigated this, so I can follow this range up to this high, right? But it really didn't commit to that, right? It just sank through that whole range there, right? Like that,
Yeah.
right? Took out the low there. So now it's like, okay, cool. Well, now what can we expect to be hit? Well, initially, the only really valid thing to me here is this, right? So I'm just going to wait and see what happens. Okay, price comes down, price pushes up. Okay, cool. Well, now we've got a whole other set of information, right? Because we've just seen this V-shaped recovery, right? Does this now make enough sense? Well, yeah, definitely, right? Hasn't got interaction, but it has come into this whole previous range, right? Which
Yeah.
we validate as a higher time frame POI, right? So there is some form of SC flip there. So then it's like, right, cool. What do we get here? Okay, cool. We've had another change of character. Right, let's just see order flow shift when we come back in here. Right, okay, cool. Right, order flow we had another change of character here. Right, do we get some form of interaction? We get some form of reaction there. Okay, that's failed. Right, and then for me, I'll just short that. Right, as soon as I can get like a reasonably, like as soon as I can get in with like a pip of stop, at least getting my stop in a not completely stupid place, right, like somewhere down here, right, if I can get in and get it fairly close to the high, I'm happy to take that.
Another question, I would have taken this trade exactly like this if only I classified this as a change of character, but I don't understand why. How do you classify this as a change of character? Like, I see there could be a demand like here. Wait. Okay, like, couldn't this be demand like this extreme?
In theory, yes, it could, right? But look at the bigger information that we've got, right? This is when you're looking and going, oh, well, yeah, okay, cool. Right, we get a reaction to this extreme, right? But look what happens here.
Yeah, again, shift in order flow. Yeah, okay.
Right, so order flow is bearish, again, realigned with everything. Now we can say that this is probably generated liquidity to at least run this low, right? So we can see how price reacts after that, right? And price reacts obviously very favorably, and yeah, I'm going to regret closing most of the partials on that trade when I did, but yeah, you know what I mean? Like it's like it's just trying to adapt to, like, it all happens so fucking fast as well, right?
Yeah.
Like here we've got, over the course of, how long a period is this? From here to here, right? We've got a period of 37, 38 minutes, right? Which isn't actually that long a time, right? To sort of have varying different decisions, right? Because initially I'm thinking, okay, well, if this, if you come down into here and I get a little shift in order flow, maybe I can take a long from here. Or actually, wait, now we've got this, and you're making all these decisions. And sometimes, like, it's why I missed this initial setup up here, which you probably could have got in, right? Because I didn't realize that this was a whole range previously, right? But here you probably could have gotten this a bit higher up here, something like that, right? Make sense?
Yeah. How would you have gotten in here?
I don't know, but I'm sure I could have figured out a way, mate. I generally can. Here, well, this mitigates the extreme of this, right? Here.
Oh, I see it now. Yeah.
Yeah, exactly. So we just put a little stop order below there, basically, right?
Yeah.
This is a great example of when to use a stop order, right? We come into an extreme, right? So, and we have a large liquidity pool here that we can target, right? So you can get your risk off. Like price should come and take out this liquidity at this point in time, right? Because order flow is bearish, right? Well, higher time frame order flow is bearish because we've taken out this low over here, which changes 1M order flow, whatever, right? So we come into the extreme. We see this little thing here. We can get our stop in a good place with a stop order. Right, so we can stick a stop order below there. Once price melts through it, we can just
with raw spread, yes. But if we have like 0.2, 0.3 spread, I mean, I wouldn't do that.
No, if you're trading on funded capital, I wouldn't.
Yeah, because it activated here probably, but then respects the demand and then moves.
Yeah, exactly, and then you're fucked. But yeah,
I guess the thing that put me off with that, Sam, I spoke about it earlier, is 15-minute order flow at that point was bullish, wasn't it?
Well, yes, right. But this is where you have to be aware of all of the other things as well, right? Like you have to be like, okay, cool. Well, yeah, I've had a change of character here, right? But this is where, is this a change of character or is this inducement for this?
Yeah.
Right? We get no close above. Right? Price refuses to close above, rejects quite heavily. Right? This low has failed to break swing structure, so what does this low become? Weak, right? So we can expect at least a run on that and a deeper mitigation of this. Right? The ideal way,
a nice reaction, that wasn't it? That wick.
Yeah, here the ideal thing is you would have wanted to be in long here, right? But you know you've got to take the other things into account that we're very extended, right? So if this fails to commit to the upside, is it likely to take out this high from here? Right? And it fails to commit when you see the multiple rejections of that level. Right? Then you see like nice 1M price action, right? Runs this high, gives you like some form of an internal break of structure here, change of character, another takes out another range here, right? Comes back down, mitigates this, and then we can trade that away. Right, and it's that whole thing of, you know, okay, yeah, 15M thing is bullish, right? But do I like? Where am I expecting? Where are you expecting the next long? Right? Are you expecting the long to come from here? If so, take a buy here and hedge it with the sell there. Right? Hey ho, you take a loss on this, right? That one wins, right? Or if you're expecting it to come from something like this. Right, which I guess would probably be the 15 MPOI, right? Why can't you trade it back down? It has to get there.
Yeah.
Right, so you can trade it back down, right? As soon as you see these equal lows developed here, right, most likely price is going to mitigate this lower demand level, right? Run this liquidity into there, right? And then you can look for a buy in there whilst you're in the sell, holding full volume on the sell, right? There's no change of character there. The price doesn't commit, so you hold yourself.
Yeah.
It's that really important thing. Like it's what you all like. One of the most important things you can do, right, is you can have a bias, right? That's fine, right? But I guarantee you, my bias is only right about 50% of the fucking time, max. Right? But I don't generally have a problem over buying or selling. Right? It doesn't bother me. Whatever presents to me, I'll be like, okay, well, that makes enough sense to sell for me. Right? And I'll see then how that trade develops. right? Like when I got in this morning, right? Did I expect that to go and take out these lows down here? Did I fuck, mate? Like not a chance I was expecting that to come all the way down here. You know, but stuff develops differently during the day. You know, like we need to be adaptable. We need to be able to think on our feet. We need to be able to think critically and think whether, you know, the information that we have right at that point in time is complete, right? Because it's never complete. We never have complete information. It's why we take losses, right? And is it right? Is our interpretation of it right? Right? So if our interpretation of it may well be wrong, be comfortable with that. It's absolutely fine. Right? Like literally being wrong in trading, you're not even wrong. Like it's not a thing you can describe as right and wrong because you're playing with probabilities the whole time, right? Like that's like saying you're right or wrong when you place a fucking thing on a roulette table. You either win or you lose. You're not right or wrong. There's a big difference there. Right? It's a game of chance. That's essentially all trading is. There's a massive game of chance that has trillions at stake every day. Right? So be comfortable with the fact that you can be wrong and still make money.
Working on that.
Make sense?
Yeah.
It's a really important thing to get your head around is the fact that you can be wrong about your direction, but if you're being adaptable and saying, I'm still willing to take other trades, you can still make money that day. Or that week, or that month, or whatever it is. Yeah. Does that make sense to everyone?
Yeah.
Yes. I have a quick question.
Fire away, brother.
It's about hedging. I mean, when you hedge, do you take off risk at 4R, or do you let it run?
I take off risk at 4R on every single trade I take.
Okay.
That's something I never change, personally.
Okay, because I was wondering, because when you hedge, if you lose, you win the other trade.
Yeah.
So I was saying, if you put up the risk, you win more money, or you win less money?
Well, yeah, essentially, because say you take a buy here, right? Which is a very nice buy, right? So say you take a buy here, right, and then you hedge that with a sell over here. And you hedge that with a sell over here, right? If you've still got 1% risk on this trade, you still lose 1%, right? If you've covered your risk, you just take a break even, right? So you don't lose 1%, and then this trade, I mean, it's inconsequential when that trade goes and does, 100 odd pips or whatever. But yeah, like it's always best to cover your risk on anything, if you can, right? Like this game isn't about how much money you make, it's about how much money you keep, and you only keep money by having good risk management.
Yep. Okay.
Yeah?
Thanks.
No worries.
Quick question, Ron.
Fire away, bro.
I've noticed sometimes, like, especially on the 5 seconds and stuff, like, when you get a flip, for example, sometimes, like, this PA is kind of a gap, so, like, would you take, like, this gap as a POI? Like, price gaps in the 5 seconds.
Oh, gaps?
Example, like,
gaps.
Yeah, gaps.
Gaps, I like the way I sort of rationalize gaps is they're big injections of capital. Like price hasn't got time to print at that level because it's been moved past that level. Right? So somewhere within that gap, there's a bunch of money, basically.
Yeah, so. And
right?
Sometimes, like, price tends to react in this region, so, like, would you classify this as a PY, or, like, would stick to the extremes and stuff?
No, I generally trade a reaction fucking anything I see, mate. Like, if I see a gap like that, that to me looks like a big pool of money sitting there, a big pool of unmitigated orders. So when price comes in there, if I see another shift, then yeah, cool. I'm definitely in there.
Clear.
Yeah?
Yeah, all clear now.
Doesn't mostly it comes to like specific candles, but yeah, gaps are relevant, definitely, mate.
Yeah.
But yeah, cool, guys.
Can I ask you a quick question? Yes. So when you said that you, like in the previous example, when you have a gap and you said you're gonna wait for a reaction as well. So the gap is on 5 seconds.
Yes.
Do you wait for the reaction on 5 seconds, or would you go to 1 second?
No, I don't use 1 second that often, mate. It's fucking terrifying, to be honest.
So basically, when you look for reactions, you look on the same time frame,
Normally, I mean, the only way I can rationalize the 1S is like this, and it still scares the shit out of me, mate, to be honest, because it just moves so fast. It's just always doing something. You're just like, okay, wait, hold on. Give me a second to sort of analyze this, But yeah, 5 second, I mean, nowadays I've spent enough time looking at it that it actually sort of, like even this makes some sort of sense to me, I just see like range.
Yeah.
Yeah.
I bet in 6 months you'll trade the 1 second.
I have done occasionally, mate, but honestly, you don't need. And like it's a bit dumb, to be honest. It's not dumb. I've taken it can be very helpful. And I mean, if you get good at trading it, mate, you can 100% trade it. Do you know what I mean? I know, like, there's some guy one of the guys over at Phantom knows that uses some fucking random sequence of indicators and then trades like the 1 second line chart with that, and he smashes it. Like, no idea how he's come up with that strategy, but like, if it makes sense to you, it makes sense to you, doesn't it?
Perfect.
But yeah, cool. I'm going to push it from here. You see, you've just got that range to down here, and validates this little internal range here. And then off to the moon it goes. Well, I don't know, it's done like 2 pips, but yeah. But yeah, does anyone else have any more questions?
One question, like, also like kind of the point of waiting for a 15 shock. So for example, on 4 hour, like, and we have multiple demands. So you would take buys even if we're coming like bearish order flow, buys from the discount, right? That's it.
Sorry, if this is like a 4 hour push into the 15M structure, or what?
Yeah, and this is in 15 demands, yeah. And would you take buys?
No, I'd want to see shifts in order flow from there. But then likely, right, what you're going to get is you're going to get this, right? Then this range fails, right? So now these are just going to be reaction points for pullbacks to continuations until the higher time frame objective is met, whatever that is. Maybe there's an extreme down here, right, that we then see another shift from in 15, right? And now we'll be looking just mainly for buys, right? You have to be aware that, yes, you may get shorts here, right? But all of these are likely to be very short-lived, right? Because these are all just pullbacks for, like these are going to be used as pullbacks to generate liquidity for a future move to higher prices, right? Like,
so even like
reaction points.
So even that like 4 hours is bullish and those demands, you would wait for a 15 shock at either one of these demands to start taking full on. Okay.
Mostly, yeah. Like, especially if because now, like, then we're looking at, right, this is our 4H push, right? So we're probably coming back down to mitigate EQ of the 4H. So does it make sense to look for continued buys from here? Well, yes and no, right? But if we've seen a significant demand level taken out, then this is actually a great fucking example of it today, looking at that. But here, right, 4H is bullish, right? But we see this significant shift in order flow up here, right, when we take this out, right? And then look, all of these ranges here, right, it's used as a reaction point to create liquidity for a move down. This range here is used as a reaction point to create liquidity for a move down, right? This range here is used as a reaction point to create liquidity for a move down, right?
Clear now.
So, yeah, it's always safe if you're trading with order flow on your side, basically.
Yeah, and like, what if you get like a shock on the premium of the leg? Like, would you take this to expect the high to go, or just target like the supply?
Depends. This all depends on we'll cover this sort of stuff in higher time frame narrative, because this all depends on higher time frame stuff, right? It's like here, right? If we're working this problem like top down, right, we should be aware that this is the POI that breaks daily structure, so it's actually very fucking significant, right? Yes, we've seen a pullback, but again, it's this whole bigger picture play, right? It's like you can't overemphasize the bigger picture play, right? We have had this, we've got this to this, so we are expecting still from somewhere within this leg, we are expecting a lower high at this point in time, right? That's the expectation. Okay. So cool, daily's done that, right? So now 4H is doing this, right? Cool, we've seen bullish 4H, we've seen a big liquidity generation there, big liquidity generation there, right? Within this 4H range, we run the high, we shift order flow up here. So now we may be seeing the start of that daily rollover, right? So yeah, here, in all honesty, it would have been better to wait for 15M here, anywhere in here, basically, right?
Yeah.
Because you've got that higher time frame, the bigger picture is this, right? And all we're seeing is this impulse, correction, impulse.
Makes sense, bro. All clear now.
Cool.
Yeah. Thank you.
Cool. No worries, man. Yeah, cool, guys. Right, I am going to go and eat my dinner. I'm fucking starving.
What's the plan next week for calls?
The plan for calls?
Yeah.
Right, so I'll chat to Lewis properly about it this weekend. But basically, we're going to probably do. Initially, I think it would be good to do like 2 a week on specific topics like this, right? One, we'll do like, and maybe one on Tuesday, one on Saturday, something like that. They'll all be recorded, all of that sort of stuff. And next week, because we've actually managed to actually get, 90% of the back end stuff done, apart from the video hosting, which we're sorting this weekend. But we will try to jump on before sessions and stuff like that, whenever we can, basically. Like, I don't want to make a commitment to it because I'm normally chasing a puppy around the house and trying to stop him destroying something. I don't say I'm going to jump on and then he goes and, I don't know, attacks a cat or something like that, you know. But yeah, we'll try and do that like 2-3 times a week as well. Like if we start off maybe doing it before New York, something like that, and we can record those as well, just so everyone can, you know, catch up with it afterwards if they haven't had time to jump on the call, just so they can see how we sort of build narrative pre-session, stuff like that as well. Yeah?
Okay, cool.
But yeah, we'll get like an actual timetable. I would guess something like Tuesdays and either Fridays or Saturdays. I know people like a weekend, so it might be nicer to do them like one on a Tuesday, one on a Friday, so this time or something like that, right? Yeah?
Yep.
Makes sense?
Yeah.
Cool.
Very good. Thank you so much. Have a good day.
Yeah.
Thank you. It was amazing.
Thank you. Wasn't on either of the first calls. Welcome to Hustle. Pleasure to have you here. And let's all fucking go and get it next week, right?
Yes, sure.
Good one.
Have a good one, bro.
Easy. Bye.